The following is a presentation of TFNN. Now, TFNN opens the door to the future. Larry Pesavento, systems analyst, is your tour guide into the market futures. Want to see into the future? Well, climb aboard Larry's time machine and come with us. Larry takes your phone calls now, toll free at 1-877-927-6648. This is the Futures Hour. Here's your host, Larry Pesavento.
Okay, good afternoon, folks. If you have any questions, it's 877-927-6648. I wanted to start the show with copper. This is the commodity hour, and I was listening to Basil talk about copper and how he used his indicators, and he posted one chart of the daily copper, and I don't know if you archive these or not, or go back and take a look at it, but what we're doing, and it's really amazing, we're going looking at the same thing in a little bit different approach. I'm primarily just looking at, the Fibonacci numbers of 618 and 786 retracement, and 1.27 and 1.618 expansion. But the way that Basil works with his indicators, he's looking at the same thing without the same numbers. He's looking at different types of patterns that he's developed through the years, but they're so much alike, it's amazing. But the one he talked about in copper, was very, very important because if you look at it, since early December and where we are now is we've made a very perfect three-drive to a top pattern, in the copper. And, everybody was talking about the big breakout, that occurred. And the big breakout, if that's a big breakout, they can change my name to the Green Hornet because it only took out the high from 2013 in January by I think about a penny and a half, and is now, dropped about 6 cents from that level. So when they break out, they should go, much, much farther to the upside. So whether that's going to be the case or not, we'll have to wait and see. But it was interesting how the patterns, lined up, very similar at this particular time. During the show today, we have to spend some serious time on Treasury bonds, and we have to spend some serious time on the gold market. And, not so much on silver, but we will do gold because we've hit some really major support, and we also hit some really major resistance, and we want to be able, to take a look at this. But there's one thing that someone has asked me to cover, even though it's the commodity show, and that's a particular stock. And really, I'm a technician, so this is really a good example. It's the Amazon that we've been watching for several days now. We've completed this big butterfly pattern up here. And what's interesting about this, yesterday we had incredibly good numbers on Amazon, and they were calling for Amazon to go into new high ground, and it was the next Apple or whatever they wanted to call it. And with this really, really good news, Amazon is selling off, and it's not rallying very much at all. It looks a little bit worse and worse each day. I'll put the 5-minute up there. You can see that it has been under a great deal of pressure since we had the big opening and things. So this is what happened to Apple. I'm not saying it's going to happen to Amazon, but folks, I'm a technician. I believe that what happens in the past is going to happen again in the future. These patterns repeat just like magic. And so if you're in Amazon, be careful. If it goes below 266, I would not want to be in that stock because you've had incredibly good news. You've completed major tops at the at the butterfly patterns up at the 283 level. So just be real careful, and always remember to protect your backside. That's all I can mention about the Amazon. But I don't trade the stock. I like to look at it because it's a really big big stock as far as people looking at it all the time. And boy, it is a fantastic company. I order stuff from Amazon all the time, and how they get that stuff to you so fast, it just absolutely blows me away. Now, I'm going to talk a little bit about coffee because on Basil's show, a gentleman brought it up and asked me to talk about it. Since last June, coffee has completed a huge butterfly pattern down at the $143 per pound level, and it had a of about $13 a pound, and now it's pulled back to the 61% retracement of that move from New Year's Eve, and it had a little bit of a rally, but not too much. So we'll be watching to see what will happen with coffee here. Now, there's a little joke going around in the Tiger Den about the fact that I don't trade coffee very much. The joke that I make is that when I asked my grandma about coffee when I first started trading, and she said, wherever you have the urge to trade coffee, go lay down on the couch until the urge goes away. That stems from my trading back at the McCulloch Oil Building for Conti Commodities back in the late 60s and early 70s. I'd been trading at Clayton Brokerage across the street, and they bought Clayton Brokerage and moved it across the street to the McCulloch Oil Building up on the 20th floor, which was one of the larger buildings in L.A. at the time, and they were filming. There was a movie filmed just about every week at that building because it was so pretty and had so many unusual things, so it was a really great time. And, I was one of the young, I guess you'd call me a gunslinger. I was more of a BB gun carrier than a gunslinger, but I had a pretty big positions on in coffee and also in orange juice. And the coffee was locked limit up, and I had an order to sell the coffee limit up. And when I got the fill back, it was only 5 contracts. When I got the fill back, the order was limit down. And, my broker was Roy Fassel. He's one of the most experienced brokers around. He's still trading in his 80s on his own now, about 2 blocks from where he worked. But, I said, what am I supposed to do? I want to sell it limit up, and I get filled limit down. I said sell at the market. Well, what happened is I just happened to be at the time when the market had absolutely topped. And the broker on the line, these were squawk boxes, just like you hear a squawk box on CNBC. This is where they come from. We had a squawk box from New York, and the guy yelled out, "Do you want the effing order or not?" And Roy was shaking his head, yes. I still had a pretty good profit in it, but they took about $7,000 or $8,000 in what I thought I was going to make, and so I got out of it. And the reason why was coffee didn't trade for 4 or 5 more days. It just went limit down, limit down, limit down, limit down. And it was a situation where there was a oversupply of coffee, and there were a whole lot of orders were canceled, whatever. It didn't make any difference. And so for that reason, I didn't trade coffee. The same thing happened to orange juice a few days later. So since that time, I have never traded coffee or orange juice in those 42 years. And I still trade cotton maybe once a year. But that's about it. Other than the softs, I really don't do very much. But remember, when I was trading these folks, these were pit situations, and many of the pits in New York and also in Chicago were basically, these were families that were in there. There were brothers and uncles and cousins, and they were trading against the public and everything. And so you had to know where you stood with your orders, especially if you had larger positions. I found this out in 1976 when I went to work for Drexel and started doing their trading. Then I realized that there are groups of people that have their own agendas there. But this is not what you have now. You have a really fair way of doing this with this electronic trading. They don't have that information. The people at the exchanges do, but frankly, I don't think many of those people trade because they make their money off the bids and the offers and, the trading itself. So you don't have that same problem. So it's probably a lot easier to trade coffee and some of these others, but I don't do it. They trade really nice technically. There's no doubt about it. There's, they trade really, really nice. There's just no situation where I've seen that they haven't had, really good, as far as I can see, really good places to buy and sell, and your fills are pretty good. I hear that from some of my friends that, like Rich Anderson trades the stuff and other people that I know, and they don't complain about it, so I know that the orders must be pretty good. Now, we need to talk about something that's going on in the markets that I think is very important. There's my opinion again. Anyway, we're going to take a look now at the gold here. First, we're going to start out with the gold and silver index, and we made a beautiful 61% retracement back on the lunar eclipse, and new moon of, solar eclipse and new moon of November 15th. We rallied for 8 days, and we've been going down just about consistently, and we've broken through the 786 to the downside. And this is a gold-silver index, which are stocks, and you have to ask yourself, stocks went straight up from that November 14th eclipse, and this stuff has been going down. When these cannot go up in a really good bull market, I know they're gold and silver, but when they can't go up in a bull market, there's something wrong. They might reverse and change here, but all I can tell you is they're signaling a great deal of weakness, and I think that you should be very, very careful if you're long this thing, because there's beyond any support. I mean, we've been watching the silver and the gold for the support, and that's held up really nice, and it's given us great profits. But the gold and silver stocks themselves are getting worse and worse. And so what I tried to do was I would go in and I would take a look at the world's largest stock, world's largest gold stock, of course, which is Barrick Gold. And we do have a situation where we had a butterfly pattern form, way back in August, and we had a really nice move. But since that time, we're coming down, and we're just dropping and dropping and dropping. We're near support now, where we're right near the old lows at around $30 a share in American Barrick. And if we break below that, that's going to cause more selling, and I can't see how that would be very bullish for gold. That's the only thing that I'm looking at, because they make these gold bars from these mines that these people are producing from. So we've got to be able to watch that closely, because it's certainly not acting very well as far as a commodity that supports the futures that it's behind, which is the mining stocks. They make it into gold and silver. Newmont Mining, which is another really big one, has had the same type of problem, and it's actually looking even worse and worse. It's gone through the double bottoms. We're right near a triple bottom now, and this is beginning to look like this market just wants to go lower. That's about the only thing that you can look at. We've had double and triple bottoms that have failed, and they're still dropping. So you've got to be able to say, hey, this thing's in a bear market. That's the bottom thing that you're looking at. So you've got to be careful here. And then when we get back, we're going to have to take a little break here. But when we get back from the break, we're going to re-examine the gold and silver, because we've been talking about the extreme support that we had at 1627, and then again at 1651. Then we had the nice rally, and then from there we backed off. And that's not unusual, but it can't back off much more. Going to take a break, 877-927-6648.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risks, charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
TFNN is proud to partner with Great Panther Silver for another exciting silver coin giveaway. The Great Panther Silver Super Silver Giveaway begins the week of January 28th, and we'll be choosing 47 lucky winners. It's free to enter with absolutely no strings attached. Just visit the front page of TFNN.com today to fill out your entry form. Every hour that we're on the air, 9 a.m. to 6 p.m. the week of January 28th, we'll be randomly choosing one lucky winner that will win a silver coin or bar from Great Panther Silver and TFNN. And the final hour of the week, Friday, February 1st, we'll choose 3 lucky winners. That's 47 winners in just 1 week, with over $1,000 in silver given away to our loyal listeners. Register today by visiting the front page of TFNN.com. And for more information on Great Panther Silver, you can click on their banner on the front page of TFNN.com or check them out on the NYSE Amex symbol GPL or on the Toronto Stock Exchange symbol GPR.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
This segment is brought to you by Great Panther Silver. For more information, just click the Great Panther Silver banner on the front page of TFNN.com. Now, back to the Futures Hour.
A few minutes before we go to the half-hour break, I'm going to spend with gold because we are really at critical levels. We're always at critical levels, but gold is one of the better trading vehicles that we have out there. It can be traded electronically. You get filled almost exactly within 10 or 20 cents of the exact price. The stops are, terrific. They hardly ever, take you badly on a stop. So it's really, really good to do that. But before we do that, we have to announce the winner of the Great Panther Silver for this hour is John from Haverhill, Massachusetts. And he wins a half ounce of silver. So if John will call in to TFNN, I'm sure that the folks will send the silver to him. So congratulations. And believe me, I love silver. I have all kinds of silver coins dating back into the 1700s, and I think they're some of the more beautiful numismatic coins that you can have. Anyway, get back to this. The gold, we tested the 1651 level the other day. That was a very important level. And then we had a very, very strong rally of around $30, and we were on the show yesterday talking about that because at that time we were making a 61% retracement. This was right during the Fed hours. And so this morning what I was looking at was I was expecting a pullback to come in between 1663, which is the 61% of that move from the 28th of January, all the way down to 1657, which was the 786. Now, this has come down very hard, very fast. And if we go below this 1655 level, gold is in great danger of failing here. And that means if it goes below the 1651, it'll certainly go down to the next level. The key here, folks, is that 1627.90 level, which was the 61% on the daily that I posted into Tiger TV just a little bit earlier, that is incredibly important. These markets, they can turn on a dime, and as I've said before, this stock market phenomenon that we've had since November the 14th has not, pulled the commodities up with them. And so that's different than most other times because the commodities, also go up when the stocks go up mostly. And they follow them a lot, especially with industrial commodities like we have with silver and gold and, the copper and things like that. And copper, that has a tremendous divergence. We've talked about that on the show yesterday and also on Monday's show, that the divergence between copper and the stock market is historical, to say the least. There's one other one. I wanted to show this one pattern this morning. Since we've got some time here, I'll blow this up and take a look at it, and you'll be able to see this 20-minute chart on the gold. Because what happened was after the Federal Reserve came in, gold made on a 20-minute chart. It made a really nice three drive to a top pattern, and then it sold off about $10, and then it rallied back up to the 61% retracement up around to the 1680 level, and then after that it's been selling off, and this is where when you're trading for short term, and gold is one of the greater of the trading vehicles for commodities, this is where you want to be looking to take your profits and even nibble at it from the short side if you want to. But right now we just hit the 786 at 1657. It's up a couple dollars from that level so far. So as long as that level holds, it's still a very good place to do it. Now, when you're looking at charts and you're able to, you trade full time or you're in front of the machine when key times occur, you're able to, to try to pinpoint, what these levels are. And that's all I'm doing, folks, is doing some really simple calculations to say this should be major support or this should be major resistance. That's all I'm looking at. And if you're only trying to be right, say about 65% of the time, and you're making more than $1.2 for every dollar that you're risking, you can make a very, comfortable living doing this. Takes a little bit of time. Basil mentioned on his show about patience, and patience is very important. The other thing that I think, if those of you that are new out there that really want a really big edge on this, is I would really have you look at Steve Rhodes' program, The Money Masters, because Steve happens to be not only a good friend, but he is one of my students, and in fact, he is one of the best students I've ever trained, and he does a great job with that, and it's pennies on the dollars for what it would save you. Got to take a break. 877-927-6648.
Just recently, on December 28th, Market Insight subscribers were advised to go long the QQQ, the NASDAQ 100 ETF, on December 28th at $63.91. And only 2 trading days later, after a huge jump in the markets, Market Insight subscribers were advised to sell the QQQ at $66.64 for a $2.73 or 4.27% profit to start off 2013. At the same time, Tom O'Brien had advised his clients looking for a more leveraged trade that they could have initiated a position in the QLD, the ProShares Ultra QQQ ETF, and over the same 2 trading days, Market Insight subscribers were able to lock in a $4.48 profit or an 8.47% gain in just 1 trade. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Cancel at any time during your free trial and pay nothing. Don't miss out on the next great trading opportunity in 2013. Act today.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com. Now, back to the Futures Hour.
Go ahead. Sarah's taking a shower. Okay, we're back, folks, and during the break, someone made a cute little comment that I'm a paid spokesman for Steve Rhodes. Folks, I don't get paid for doing any of this, and when I say something, it's the truth. I have no other reason to try to help you if it's not the truth, and Steve offers some great stuff, as does Basil. I don't know the other people on CNBC, on the TFNN enough to really, to make that recommendations. But with Basil and Steve, and of course Tom, I know what they have, and I know the stuff that's in their heart is really good to try to really help you. Steve helps along the mental part, which is such an important part of the trading. It's just so important. You can't believe it. The real reason why people lose money in these markets is because they either trade too much and they don't put their stops in, they don't have any trading plan at all, or the second reason is they don't put a stop in at all. And I've got a list of rules up on my big oil painting behind my desk here, and the very first one, it says, never add to a losing position. That's the worst thing you can do. When you do that, you're not only your analysis is wrong, but you're increasing your risk exposure, and our job in trading is to decrease risk exposure because we don't know whether we're going to win or lose, so the only thing we can control is our risk, and that's what, we have to be able to do. So anyway, that's what we're looking at. Now, we had a request to take a look at natural gas. We looked at that, I believe, on Monday. It had a 3 drive to a top pattern. way back in November. It had some beautiful cycles that had formed from April through August, and then from August through January. They've been very symmetrical. And then we had the rally off the last cycle that stopped exactly at the 61% retracement at that 362 level. And then we've come down, and we came down with a big gap, which is a bad sign. So I'm expecting natural gas to have a pretty good correction in this particular cycle. I believe we're going to get down to at least the 273 level. I'll post that chart into the room so that you're into Tiger TV, so you'll see that it forms a really beautiful Gartley on a longer term time frame, and it'll give you an idea. And since we do this, every Thursday, we'll be able to catch up. But this is not going to get here anytime soon, folks. This is going to take several weeks. If it is in fact correct, it's going to take several weeks, to get down into this area of 273. If in fact it does do that. So that's what it looks like in natural gas. It's a pretty good thing to trade. It's very liquid. It follows the numbers and the patterns very nicely. And I don't trade it very often, maybe once or twice a year. I'm basically a crude oil junkie, and I trade crude almost every day. And but the natural gas is quite good. And I believe in the future, I think natural gas is going to be, one of the bigger components of energy in our country. That's all I can really mention about that. I don't know too much about the fundamentals. Okay, now the next thing I would like to talk about is the lumber market, because it's related to the housing market. We've had a tremendous bull market in lumber since 2009 bottom, and we've completed some major patterns here in lumber. This chart was brought to our attention when it was making the high up there at 390 per cubic foot in lumber by Mr. Zitow in the Tiger Den, and he had it completely analyzed perfectly right at the high of the day, and we're now down over $4,000 a contract and still dropping. And so this is a situation where all the patterns and everything come together. Lumber is a relatively thinly traded commodity, but for a person that's not running a hedge fund or something like that, it can take any way from $1 to $5 or 1 to 5 to 10 contracts without any trouble. And it's traded electronically like everything else, so you get a pretty good idea of your stops and everything, and it gives you some pretty good ideas. But the patterns are there. You could actually teach a course on this lumber chart that we posted in here to Tiger TV, because it's got all of the retracements, it's got the Gartleys, it's got the butterflies, and it really does do a really nice job of technically looking at where the market is. John also posted a monthly chart in the Tiger TV that shows some of the same things, but it actually is just looking at it on a monthly basis, giving you a little farther view of what things are looking at. I had a question I made a little comments about the ETFs and why I didn't like them or anything yesterday, and it's not that I don't like ETFs. It's just that when we talked about the ETF for I can't even remember which one it was now. I remember the diamond ETF worked really good, but the ETF versus the Japanese yen, the Japanese stock market versus the ETF EWJ. In fact, that there was virtually no correlation, some correlation, but if you'd have bought the ETF for the Japanese stock market as opposed to buying the futures, the futures actually would have made you probably 10 times the amount of money. The corresponding risk might have been a little bit higher. But frankly, there was very little opportunity in that from what is, that's it. Someone mentioned you have to look what's inside the ETF, and I'm absolutely sure that these people that make these ETFs, they make them to make money, and if they can put something in there, a clause of some kind that allows you to, get by, you really want to be really careful. That's all I can say. Now, with the diamonds and the spiders and things like that, there's usually no problem with those because those are so big and they trade so much that it's not a problem. But some of the smaller ones are a whole lot less. That's the bottom line of what I'm looking at. Now, there is one other pattern that I would like to cover. It's not a commodity, but it is a commodity because it's a futures, but it's the NASDAQ, and we have a really interesting pattern here because we've completed this expanding triangle, this 5-wave expanding triangle, and it also, after it had completed, it rallied back up to the 61% retracement. And this is a time when we had Amazon rallying and also when we had Apple rallying, and now, those are not, moving up too much. So the NASDAQ still looks, very bearish. It doesn't have a whole lot of, and it should have a lot of followers given the fact that it's a tech stock, but, this is what we want to be able to look at. Okay, so my comment, someone just flashed me a question about Amazon, and all I said is the news that Amazon had these wonderful earnings yesterday. It was supposed to be up $20-some a share to make new highs above 284. It can only get to about 276, and it's down about $12. It's down about $10 right now from that level with very, very bullish news. And if you remember, this is what happened with Apple. If you remember the people standing in the stores and they were paying people $100 to stand in line to go back and, to see what products they could buy, and they were selling at 2 and 3 times face value on eBay and stuff like that. Well, that emotionalism didn't carry through for Apple. And if you're getting good news and it's not working, in Amazon, you got to be really careful. Just be careful with these. When you got good news and the market doesn't go up, that's telling you something. If you got really bad news and the market doesn't go down, buy the stuff, because if it doesn't go down with bad news, it's only got one way to go, and that's up. So I believe the prices are out there to tell you. They can lie to you. They can cheat to you. They can give you misinformation. They can do all these things. But the one thing they can't do is hide from you. If prices go up, there are more buyers. If prices go down, there's more sellers. That's the bottom line. That's how you try to figure out this stuff. And, that's how I view it anyway. So we'll see, see what happens, with this, a little bit longer down the time. Yesterday we talked about the fact that the VIX index had not been able to go down during this last 5-day rally that we had in the stock market, and we're up again a little bit today. Not very much, but at least it's not falling badly like it usually has. But the VIX index is not a dinosaur, folks. It's still good. It will still help us. You still have to follow it, because even though the people are saying it's dead, it doesn't do its job anymore. It does its job very well. As a matter of fact, on Christmas, New Year's Eve, it was making a bearish Gartley pattern, and it was right at the exact 61% retracement up at that 23 level. And again, Basil was saying 2 or 3 weeks before that happened that it had to get to around the 22 level, and it went to 23. So what does Basil know? He was looking for 22, it went to 23. Let's take him out and have him flogged. Well, maybe not. We'll give him one more chance. He's a good guy. Anyway, this is what we're looking at with the VIX index. I believe we're going to get back sometime in the next few months. We'll probably trade above 28 because they will, all of the stuff that's going on with all the jubilation that's going on will probably turn to, sour cream sometime down the road would be my guess. But when, I'm not exactly sure. Now, I want to do one other chart here related to the stock market, because someone, asked me to look at it, and that is the fact that on a really long-term basis here in stocks, if you look at, what we've done, and I'm talking about the New York Stock Exchange Index, it has not taken out the high from 2007. We've done that with the NASDAQ and a few others, and also the Russell, but with the overall stock market, we've really done nothing more than make a 786 rally off of that. And the key date here that I've always said, I'm going to show you. I'm going to double. It's August the 15th, of 2007. That's the planetary the confinement day, that not a configuration day that we only see once every several hundred years. And that's when I said, once we go below that, we're going to be in a really bear market for quite a while. And, of course, we were for a couple of years, but we've come back to that level again. Now, the other indices have taken it out, but the New York Stock Exchange Index, hasn't taken it out. We're still in the trade of the year that I put on, selling the S&P in that 1480 area with a stop at 1507. They almost got us yesterday. Still might get us. It wouldn't surprise me because it's, the old high, and anything could make it go up and knock it out. But if it does, that's it. You have to put a dollar stop in, and we'll wait and see. Now, there is another important one that we must talk about, and that is the bond market, because as we were on the air yesterday, we were right at the Fibonacci relationships in the bonds on the daily chart, and it stopped exactly where it was supposed to. And, we really, if I can just do, it was the weekly. Excuse me, folks. I had a little mental lapse here. Yeah, there we go. And I'll put that in. And then we'll go to, we'll take a look at this on the a little bit shorter term time frame. So that's about it. We'll see what happens. Now, I'm going to go from a weekly chart. I'm going to go down to a 30-minute chart on Treasury bonds just to show that the nice harmony that we have. Fact is, I think I'll even go to a 5-minute. Probably, 5-minute does it just as well. And we'll just move it over a little bit. And this is going over the last 3 or 4 days of Treasury bonds. And all it's going to do, it's going to show you. In fact, first is let's just do this the fun way. I'm going to put the chart in first, and then I'm going to come in, and then I'll reinstitute the chart into the room showing you the patterns. The first we showed the blank chart, and the second one we're going to put in. It's going to show the fact that we made the first ABCD Gartley up at that 144 level, and then we went down and made the beautiful 1.618 expansion down, and that was the 618 on the daily. And then after that, we came and we made another Gartley pattern yesterday, and that happened exactly again at the 618 retracement, and that was at the 43 level. And where we are now is we just completed another 61% retracement today, exactly at 143. And so this market is following just like the little roadmap that we like to see. And so all we're looking for now is we need the bonds to close above 144. That's about 22 pips from where we are now. And if they can do that, I think that would start to put some more pressure on the stock market if, in fact, we are going to get any pressure on the stock market. So that's what the bonds are doing, and that's why they're fun to trade, on a daily basis. They follow the numbers very, very closely. And then by the numbers, I'm only looking at 618, 786 for contraction, and 1.27 and 1.618, for the expansion. We've got to take a little break here, and then we'll be back to wrap up the show.
If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com. Now, back to the Futures Hour.
Okay, we're back, folks. We'll finish up this show with the corn market. This is something we've been bullish with for quite a while. Actually, since the New Year's Eve time frame, we made the big butterfly pattern. It came down exactly where we were hoping it would. This was one that we've been covering for weeks before it actually occurred. And now, we've had a really big move up, and then we've had a very small 7-day retracement that stopped exactly at the 382 level, and that's a very important thing to look at. But what I'm going to do now is just to show you, I'm going to go to a 30-minute chart on corn and just show you, how lovely the patterns are. I mean, you have ABCD patterns all over the chart, and it makes beautiful 61% retracements. I'll do them one at a time so that you can see them. The first one we had occurred back on about 5 days ago. We had a beautiful 61% retracement that occurred, down at the 719 level. I'll put that one in. We'll walk these through sequence so you'll see what happens. And then after that pattern finished, it went up and it completed a perfect ABCD up at the 732 per bushel level. Then it came down and made a 50% retracement. And now what's happened is we've made a much larger ABCD pattern complete just the other day, actually last night, and that was up at the 745 level. And so we're in the midst of a small correction now, but the market is still very, very bullish. If you get a chance and you're into Tiger TV today, walk through that sequence that we just did in corn. There's about four or five slides that are there, but it shows the butterfly pattern on the downside on the daily. Then it walks through looking at the 20 or the 30-minute chart, showing you how harmonic and how the market in corn repeats itself. And folks, this is the largest crop that we have in the United States. I mean, we don't do anything bigger than we do in corn. So this is a big, very well liquid and lovely, nicely traded commodity. So it's a fun thing, to keep an eye on. So it's a great thing to trade if you want to learn how to trade. The margin is small. It has great fills, and you have good opportunities because the patterns are both on the 30-minute. They're on the daily. They're also on the 5-minute. But that's relatively they're easy to look at once you study it. But you have to study it first, and that's the main thing. Someone asked a question: how much does patience count in trading? Well, it's just like being a doctor. If a doctor doesn't have patience, he doesn't have any business. And we're the same here. If you don't have patience in the commodity markets or stock markets to wait for your opportunities and to trade under your circumstances and under your rules, then you're playing the game that they want you to play, and that's not what you're supposed to do. You want to play under the game that you want to play. That's the beauty of trading, whether it's pattern recognition or using oscillators or whatever you want. You must trade, under the situations that you have described that you want to trade under. And what we like to do is to find a pattern to complete, know that our risk is going to be X and our profit is going to be X plus 25% or 4 to 1 or 10 to 1. Whatever it happens to be. So that's what we're trying to do. That's it, folks. Live every day in an attitude of gratitude, and may God bless. See you on Monday.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.